All right, let me know if you can hear me in the chats. Test, test, one, two, three. Right, so today, very simple day. Every day this week has been simple. It's bullish bias until proven otherwise. Prior day's low has not broken down. We have PPI today, in which created this candlestick for all-time high breakout expansion attempt. And then we have CPI tomorrow, which is also a major catalyst to make sure you are prepared for. Make sure your orders are prepared for it as well, in case you have any open positions as it pertains to stop losses and targets. So for today, we wanted to see if all-time high was going to expand or if all-time high was going to get faded. We did indeed get all-time high expansion, but I think the current structure is very interesting. So let's jump into the notes and discuss it. As you guys know, everything is pre-planned in the pre-market. I turn my brain off during RTH and I let the structures do the talking for me because every single thing is pre-planned in the pre-market. You have to use the contextual analysis, you have to use the structures, the entry models, and of course the time frame that you're on to your advantage in order to create a consistent, profitable trading system. Trading system equals trading process and trading edge. Those two things combined create your system, and your system should make you do the number one thing that traders need to do, which is extract profits from the game. All right, so bulls are getting antsy. As of writing, we are heading into the PPI event and price is hovering above all-time high. We will see if all-time high expansion gets printed for bullish time frame alignments or if all-time high gets faded again for a false breakout. This week has been absurdly bullish. Yesterday low needs to break down. All-time high targets has been hit. Structurally, price currently is undergoing a breakout attempt above all-time high. Will it get faded or will 6600s be met in the next few days is up to the charts. We will not tell it what it wants to do. We will simply align with the market structures to understand who's trapped and who's in control on which time frames. Obviously, holding above all-time high is bullish time frame alignment. This week has been extremely bullish in general, as last Friday's low was unable to be tested, and we held above a previous day's low every day. Since the all-time high target has been hit, we must see initiative buying. It's very important to understand. Excuse me. We must see initiative buying and a good economic report for all-time high breakout expansion, or price can potentially visit yesterday's low. In the case of bulls today, they would prefer to hold above the overnight lows for a big breakout attempt above all-time high. The first breakdown trigger for last Friday's sell-off was the overnight high 65.31. 65.31 has acted as overnight support today, and it is once again the first level sellers need to break down if volatility is to potentially return. 65.23 must break down as well. Below 65.23, I will be aware of liquidation for another false breakout in which the prior day's low can step in, 64.8925. At this point, a ton of retail breakout chasers will be trapped, and buyers must print another false breakdown of a daily low if they want to remain secure in the driver's seats. Below yesterday's low opens the floodgates for hopefully a reversal into last Friday's ranged low. So if you look into the chat, I posted at 9:14 a.m. the overview for today's RTH session before the RTH session began. And I think the real parameters for today was if bulls were going to hold above all-time high or is price action going to fade it. And I think after the PPI events, it's quite obvious that bulls tried their absolute best up until the afternoon today to hold above the previous all-time high. But remember the key external context that we discussed in those notes. The market must be showcasing initiative buying if we are to hold above all-time high and traverse towards 6600 flat psychological level, right? NQ closed flat. Apple is red off of the announcement yesterday. Amazon is really red as well. Google is red. Netflix is red. Meta is red. And all in all, NQ is not showing initiative buying today. Therefore, there was no breakout above the PPI high. In the notes as well, in that overview, I posted that breaking out above the pre-market high, the PPI high, will showcase that there is initiative buying and there can be a trend day towards that 6600 flat level. Notice how the morning first hour high today is below the pre-market high, and then you have the context of the watch list that's showcasing that there isn't initiative buying for a trend day to the upside today. That being said, we're not going to randomly short unless there's a setup. And by the way, there is a very interesting Fibonacci trap right now. If I draw high to low using the all-time high structure, this is very, very interesting. And will the selling pressure created below all-time high now continue into overnight is the question that I think I will definitely write about a lot in the after hours homework review. All-time high, will it get faded? That's the second part of our analysis this morning. It looks like sellers are really trying their best to fade all-time high here, holding below 65.41. If anything, they just need to hold below today's high of day and the pre-market high in order for a potential trap, right? In order for a potential false breakout structure to be created. However, false breakouts of the all-time high is only confirmed if supports start to fail. And we talked about in the notes 65.23, the prior 2-week high. It's right below the overnight lows, such that if bulls want to remain in strength, right, just because all-time high potentially has the opportunity to get faded, doesn't mean that it will get faded, so long as the overnight lows essentially hold. That could sustain the bullish momentum that we've had all week. And would you look at that? We printed a fantastic false breakdown of the overnight lows, right? That stemmed back to here. And would you look at that? 65.23 is the low of the day, 65.2250. Let's go back to the notes. 65.23 is right here. This marks the prior 2-week high. It was resistance yesterday, then flipped support. The immediate support for today, we'll see if it acts as a false breakdown pivot for the overnight lows. Essentially what I'm saying with the immediate support terminology is that if the immediate support holds, then we just assume that bulls are very secure in the driver's seat. The immediate support failing is going to be the major warning sign number one that volatility can return. And then, of course, we have more significant supports below. All in all, it's a very simple and chill day. Will all-time high get faded tomorrow? We'll see. Will all-time high continue to expand tomorrow? We'll see. It's in the hands of the CPI number. And the Fibonacci trap right here, this can be a valid opportunity. It's really an interesting time in the market because if we zoom out to the 4-hour time frame, all the way back to July 31st, right here, we have faded all-time high potentially 5 times. We have 4 confirmed all-time high false breakouts. First one is right here. Second one is right here. The third one is right here. The fourth one is right here. But will this be the 5th one? That's something that we're going to be watching for the rest of the week heading into next week. So if you're somebody that's aggressive today and you saw the false breakdown of the overnight lows and you wanted to trade it, what's the entry model? Let's go ahead and zoom into a 5-minute time frame. There's a lot of chop over here. So obviously there's a lot of chop because it is the first significant support. If there's no volatility, then that's what creates chop. We see that price action is rejecting 65.31, but we're holding 65.23. We go back to the notes. We know that 65.23 is the level to sustain bullish momentum. So 65.23 being the low of the day is really no surprise. However, printing a false breakdown of 65.31, which is just the overnight lows off of 65.23, that's essentially going to be your entry model. And the first target is obviously all-time high, right? 65.41. You manage your risk at 65.41, and we'll see tomorrow if 65.41 ends up becoming support once again, as it was support all day today, but it eventually failed around 1:30, in which we needed to contest the gap fill, which is right here. This is yesterday's close, the gap fill, and we also had confluence with the prior 2-week high significance level. The false breakdown at the overnight lows, extremely aggressive setup. It's definitely not something that you have to take, and it's definitely something that I would not take for me personally. But again, as we talk about every day, it comes down to your personality traits, it comes down to your system, and it comes down to what you want to do, right? If you want to trade the aggressive entries, there's nothing wrong with it, but you have to be willing to take the better supports below, right? You have to be willing to take 64.93 or the prior day's low That's what has to be a part of your trade plan. It just think about it like this. If the overnight lows false breakdown is in your trade plan, then why isn't the prior day's low false breakdown a part of your trade plan as well, right? The lower that we go, the better the opportunity gets. So why would you want to take the lower quality opportunity but ignore the higher quality opportunity? That doesn't make any sense. And that's the constant spiral that retail traders are in. Maybe they're just not zooming out wide enough. Maybe they just don't have good enough contextual understanding of what the structures actually mean to the charts. But I think that is the most logical opinion, regardless of what anybody wants to think, right? You have to basically take higher quality setups, no matter if you ignore lower quality or you take lower quality. I think that makes most sense, right? Anyways, that's pretty much all for today. I just took 65.27 and sold at 65.40. Yep, that was definitely a valid false breakdown of the overnight lows, right? Valid false breakdown. These opportunities are valid and they're time frame dependent, and it comes down to the psychology, right? Psychology is so important because you don't want to end up in a rabbit hole. A lot of people, I definitely dealt with this before. A lot of times, traders, they take one trade and they lose. They don't take the next ends up being the winner, because think of it like this: if the next one is lower than the one that you originally took, how many stop losses are at the second trade versus the first trade? How much liquidity is at the second trade versus the first trade? What's the probability now of the second trade working out versus the first trade? And obviously, the more red the chart is, the harder it is for retail to click buy. And those are going to be the best opportunities for institutions to load up, get their orders filled, and essentially create a mean reversion as the higher time frames remain bullish. Straw the structure and took the chance. Exactly. That's what trading is at the end of the day. You have to take the chance. You have to understand the probability behind what you're doing. And you have to obviously manage your risk, right? Position sizing is key. Risk management is key. We do not expect to get rich off of one trade, right? It's a constant repetition of doing the same thing over and over and over again. And profitability is one of the most boring things in trading. It sounds ironic, but profitability is one of the most boring things in trading, because you will have to wait. Sometimes, for me, for example, you'll have to wait a long time before your edge and your entry model is activated. Had to wait the whole day though. Exactly, right? There's probably a lot of people that were buying all-time high today and got faded. And that's definitely good on your part to wait. Wait for the false breakdown, right? It's definitely a 40-point move, so it's better than a 20-point move, that's for sure. Minus 20 points into all-time high versus minus 40 points into the overnight lows, into the gap fill, into the prior 2-week high. Much rather take this trade over this trade up here, right? That definitely makes a lot of sense. So good job on your part. Other than that, again, let's talk about a little bit what could be happening tomorrow. All-time high looks like it can potentially have been faded once again for the 5th time since July 31st. Will it stick though? We need confirmation of this idea. We need today's low to break down. Remember, the original notes for this week is that a daily low has not broken down since September 2nd. And this bottom, this 315 bottom right here, 65.2250, it's just the holy grail now for sellers to absolutely crush all the liquidity in the range. Get all those stop losses in yesterday's low. Get all those stop losses at Sunday's low. Get all those stop losses at last Friday's low. That's going to be awesome for me to see, because when I see that stop losses are getting popped at daily lows and I see that the day is super red, that's when I want to start buying, right? Just like last Tuesday, I walked away with a little bit less than 6R on that trade, right? So we'll see if it happens again. 64.52 has been added as a high quality low of interest. 64.52, this is last Friday's low. And then below that, we have 64.26. 63.87 is a little bit of a finicky level now, because we have 1, 2, 3 lows below it that are obviously of more significance. But we'll see if they're selling exhaustion into the level. Same thing as last Tuesday. 63.62.75 will remain the most important level on the 4-hour charts. Just simply looking at the structures we've created since August 20th, we have 1, 2, 3, 4 massive lows here of institutional accumulation. So if those lows do break down, it's going to change the contextual bias of the 4-hour time frame. Maybe we get a little bit bearish, maybe we get a little bit more neutral. But the lower that we go, the better the opportunities will get. 63.34, 63.13, 62.97. and especially 62.39, which is a bigger picture low of interest, right? So we're going from intraday to higher time frame to bigger picture. The bigger picture low is all the way down here from August 1st, 62.39.50. That's a massive, massive, massive inflection point on the chart, and it stems back to early July. Early July, we spent literally the whole month chopping it out here. We broke out all-time high. We returned. This was a minus 3% dip. Yeah, minus 3.5% dip. We ended up sustaining the July lows, and we pushed up since the August 1st low about 5%. So returning to the August 1st low, that's the bigger picture. That's a minus 6% dip almost on the S&P. So that's going to be almost correction territory, and we'll see what happens down there, right? That's obviously a very bigger picture. So maybe we don't even get there this year. Who knows? We'll see. Really comes down to the regime. It comes down to external context. And it really just comes down to if this fifth false breakout of all-time high wants to stick. I think if there's going to be a fifth false breakout of all-time high since July 31st, a lot of traders are going to be extremely frustrated, and that could lead to volatility as well. That could lead to volatility if market participants get overly emotional. That's especially what happened last Friday too. I think a lot of market participants got overly emotional on this big red candle, started to realize, started to jump in short. Institutions saw that opportunity to once again protect the pattern they've created, which is just hold above daily lows, right? So we'll see what happens. To reiterate today's session, the main ideas for today was if all-time high was going to be sustained, we needed to see initiative buying in the watch list, and we needed to see NQ obviously be green. Eventually, NQ flipped red. Eventually, a lot of these tickers just stayed red. Apple, Amazon, they did not go red to green. Therefore, no initiative buying in the markets. Therefore, we couldn't hold above all-time high. And right now is very important because if price action sustains below all-time high, breaks down today's low of day, that could be a false breakout confirmation, and we can lead into Wednesday's low. Or Tuesday's low, excuse me. Tuesday's low is a major inflection point as we have all of these lows from the earlier part of the week. And then below here, we enter the higher time frame, high quality areas of interest at last Friday's balance range low. So we'll see what happens. We will see. Stay focused on your plan and your process. If you guys have any questions, comments, concerns, you can let me know. Let's see what page we're on. It's just a very simple day, right? This week in general has been extremely simple. And it's really important. The first thing that I said today in the pre-market live stream was do not have FOMO. Do not have FOMO. Day like today crushes retail traders as people have FOMO when they see all-time high. He's not closing. He's kicked out by stop loss or take profit. Yeah, exactly. It's nice to have a trader like that in your ear. It's very important to understand what he means by that. Kicked off the train is what I like to call it. That's what one of my mentors call it. You get kicked off the train, right? You don't tell the train conductor to stop moving, right? You got to get kicked off by it. So that's what the stop loss and the targets are there for. All right, we are on page 134 of Best Loser Wins. I saw a question yesterday about the stream recording archives in case you guys want to look back on previous days or previous readings. That is in the Blueprint for Success channel. Every single after hours recap we've done since we've started doing these is posted in there. So if you want to look at any day in the past, all the stream recordings are in there, right? So I'm very excited to see what happens tomorrow because I'm itching to see some blood on the streets. I'm itching to see red. That's going to be awesome. But we'll see. It is what it is. I'm fairly happy with September so far. I only took one trade in September so far, and I crushed it. And I'm just waiting for the next macro time frame dip. All right. So, would consider taking a small position false breakout trade if it seems to go to the minus 2 or 3% trade a retracement. I would say right now the Fibonacci trap. So that's the entry model right now. We draw high to low like this. The Fibonacci trap of all-time high is 100% viable. 100%. Your stop loss here is a little tricky, although you could look to do a 20-point wide stop loss behind today's high and look to target the previous day's low, which would be down here, 64.8925. We know that if today's low is to break down 65.22, which you could use as a small target, 25% target of your position, if this does break down, that's going to be massive indication that the false breakout of all-time high is potentially confirmed and too many people are trapped up here and we need to liquidate into better supports. So 100% all-time high false breakout is viable that we talked about earlier. For me personally, I very rarely short ES unless we're in a downtrend. And we know that the market is not in a downtrend, but I think that Fibonacci trap is viable. All right. As shown in figure 15, instead of continuing lower, the DAX index consolidates and moves higher, and it eventually takes out my stop loss. I am now at minus 35 points. The previous pattern does suggest higher prices to come. Yes, it looks like a double top sell, but on a gap up day, the odds are higher of continuation than of a reversal. Remember the saying, in bull markets, resistance is often broken, and in bear markets, support rarely holds. So let me double check if this is the page. No, this is not the page. We're on 143. I had a feeling I was reading the same stuff. All right, real life example. The following chart shows the Dow Jones index on a trend day. I define a trend day as a day when the market opens at the high or the low of the day and closes at the low or the high of the day. The problem with trend days is that you won't know it was a trend day until the day is over. So you have to make an assumption based around what you see on the charts about whether you think it is a trend day or not. I have researched the price action behavior of the Dow Jones Index over 18 years. I have identified a handful of first hour patterns, which I believe are precursors for trend days. One of those patterns is a gap down after a gap up day, where the gap down is not filled within the first hour. Figure 20 shows a positive Thursday. The trade I want to show you took place on the Friday. Friday is notorious for producing lasting trends, often leading to trend days, especially on Fridays at the beginning or end of the month. I have also included a screenshot of my trading monitor. All right, the top line shows my overall exposure. It states I am short 3,000 in Wall Street. My average is 25,419. The current price is 25,135. The 3,000 means I am short 3,000 Danish kroner per point, which equates to about $500 per point movement in the Dow. So for every point the Dow index drops, I make 3,000 kroner, and vice versa. For every point it rallies, I lose 3,000 kroner. At the time of the screenshots, I am in profit by 851,000 kroner. Below my total exposure, you see each of the entries, which add up to 3,000. If you look at the previous chart, you will see the numbers 1, 2, and 3. Those are points where I am adding to my position. All right. If you look at the previous charts, excuse me, I already read that. At point 1 on the charts, I start selling shorts. I scale into my short position over 5 entries. These are the first 5 entries you see below, my total exposure. At point 2, I add more short positions. I do so because the market is weak and I am certain a trend day is developing. I add about 25% more to my short position at point 2. At point 3, I add about 10% more to my short position. As the market moves lower, I add to my positions, as I have been trained to do so. I have moved my stop loss down as well. What you are unable to see on the chart is that initially the markets moved against me. What I am doing here is critical to your understanding of fear. I have been underwater on my position and I am now finally making money. My brain has had to endure pain during the loss period, and I am now being sent signals from my mind to relieve my brain of the pain it felt during the losing period about 15 minutes earlier. I counteract this pain by actively doing the very thing that causes me pain. I am embracing the discomfort by compounding it. This is required if I am to actively engage in behavior that is the opposite of the 90%. You will have noticed that my add-on is not a big problem, yet it serves to reinforce the right kind of behavior. All right, let me quickly, 1 second. All right. The Dow falls strongly. I am in the safe zone now. My core position cannot be threatened. My stops are placed at break even. However, I am still prepared to let this trade turn into an insignificant trade, small profit trade, and the hope that it will turn into a significant trade. You must find your own level of risk temperance. Once I was asked, if you keep adding to your trades, when do you take profits? That is a great question. I use the charts to take profits. If I double bottom on a chart and I am short, then I might be tempted to take profits. Alternatively, and this is a really good trick, I will place my stop loss where I would want to get into the market, but in the other direction. For example, in this case, if I am short the Dow Jones index, I might place my stop loss at the price level where I would want to turn into a buyer of the index. Although I am 100 points in profits, I am by no means relaxing. I am adding to my positions again and again in smaller increments in order to reinforce the right behavior. The trade had the potential to turn into a spectacular trade. It didn't. The Dow bounced strongly before falling again, and although I made a profit, it was not the amount you see on the screenshots. That is very important for me to get across to you because I think it is important that you establish some criteria for how much of your paper profits you are prepared to give away in order to capture the really big days. There are days when I come to work and I just want to capture 20 to 30 points and then be done. Not every day has hundreds of points available in it. Then there are days when the market starts out very strongly or very weakly, and you think to yourself, this could be a really big day. I have a philosophy to trading that means I am prepared to sacrifice profits in order to discover how big the profits can get. If you don't have that philosophy, you will never discover how big the profits can get. If you always think of potential targets using technical analysis, you are most likely just talking your way out of a good trade. You might be using technical measures to time your exits, but I don't subscribe to this method. There is a reason for that. When the market is trending and I am on board the trend with a position, I hope that the market will close that night at its strongest/weakest for the day. It happens on at least 20% of all trading days in stock indices. Yes, I've had plenty of disappointments, but I have had sufficient stellar days to make it part of my philosophy. DAX index trading example. Let me show you another example of a trade where I added to my positions. However, this time I will show you what I saw at the time of the trade. See figure 21. I am not on board the first pushdown. I look at the rebound for an opportunity to short the DAX index. On the next image, you can see my initial position entries highlighted in box 1. DAX finally caves in and resumes its downtrend, as shown in figure 22. You can see my subsequent short entries in box 2. There are a couple of things I would like you to see here. I am not afraid to sell short something that has already fallen in price. This is consistent with what the majority of people do not want to do. I scale into the position in this example and I add aggressively to my short position once my position is in profits. I urge you to contemplate how you can introduce the elements of adding to winners into your trading. I am not interested in rewriting your trading plan. I am not interested in turning you into a copy of me. I am interested in trying to make you understand the value of pain in trading as a barometer for adding to positions. If it is uncomfortable, then it is probably the right thing to do. I will repeat something I mentioned earlier. I think you should give serious contemplation to the question of why people in general find it's easier to add to a losing trade than a winning trade. I don't ever want to be accused of glorifying trading. It is a risky proposition. 20 years ago, most brokers in Europe didn't have what we have today. Or excuse me, let me reread that. 20 years ago, most brokers in Europe didn't have what we today know as negative balance protection, so margin calls. Today, it is legal requirements. It means that you can't lose more money than is available on your trading accounts. You can't lose a lot more than you anticipate, especially if you add to positions like I do. As you become better at trading, you will want to trade bigger and bigger size, and the market on a big position doesn't have to change direction by a lot. Therefore, before you give away a big portion of your open profits. If you want proof of that, here it is. This was a perfectly good looking DAX position which turned from being a profitable to showing a significant loss. It starts well with a short position at 11,288. I then add to the position as the DAX index falls. Then the market reverses and I add a little more at the old top. At the point of the screenshot, I am short 4,500 kroner per point and I am losing 25 points. I close the position shortly after for a loss. Uncomfortable. There are no shortcuts in the trading industry, any more than there are shortcuts in, say, professional sports. I expect to get uncomfortable during the trading. At times, it feels like the minutes last for hours. My impatience to do something is raging within me. I am battling my own emotions more than I am battling the markets. Finally, when I am in a position, my mind has something to occupy itself with. Be careful what you ask for. Maybe the position is showing a loss, so now I am battling my subconscious mind, which wants the position to run a little longer. My conscious mind has a stop loss, but my subconscious mind wants me to remove it. It doesn't want me to lose. It could be the position is going well. Now my subconscious wants me to take my profits. It loves the gratification of a good profit. So I am battling it whether I am winning or losing on my trades. The key to victory starts with being mindful of the existence of two brains. The ability to anticipate your enemy's next move is crucial. The subconscious brain is a rather simple beast. It just wants to avoid pain. For the subconscious brain, there are two pains in trading. There is the pain of seeing a profit. When it sees a profit, it wants you to close it because then it doesn't have to deal with the pain of seeing the profit disappear. Then there is the pain of loss. When the subconscious brain sees a loss, it wants you to hold onto the position a little longer and a little longer. Otherwise, it will have to deal with the pain of taking the loss. As long as the position is open, there is always hope. In a nutshell, what separates the 10% of winners from the 90% of losers is which brain they are listening to. It took me many years to realize this. I developed a system for my mind, a training program that enabled me to withstand the influences of the emotional subconscious brain on my trading decisions. During the round-the-clock trader events referred to previously, a guest asked me if I wasn't afraid that the market would turn back up the moment I went shorts. Who do you think was really asking that question? It was the part of his mind controlled by fear. Of course, the market might very well turn around. I would lie if I said that had never happened. It probably happened 5 times out of 10. So the real question to be asked is this: what would cause you more pain? Number 1, you sell short and the market reverses back up. Number 2, you do nothing and the market reverses back up. Number 3, you sell shorts and the market continues lower. Number 4, you do nothing and the market continues lower. Option 1, I sell short and the darn market moves against me again. It is annoying, but the stop loss will take care of my exits. At least I can say that I followed my plan. Option 2, I do nothing and the market moves back up. I might be happy, but I have just trained my brain to not follow the plan, and I was rewarded for it. I was rewarded by not selling short, which would have lost me money. And my mind is now congratulating me for my excellent chart reading skills, but for all the wrong reasons. Option 3, I sell short like I am supposed to, and the market follows through to the downside. Instead of clapping my small paws in joy, I am proactive and I add to my winning trade. I am doing absolutely everything I am meant to do. Option 4, I decide not to follow the plan of shorting and the market moves aggressively lower. I would have made all the lost money back from the first trade, but I do not. I can't speak for you, but I will tell you how I feel about it. It causes me more emotional pain to miss a move because I didn't follow through on my plan when I followed through with my plan. So let's reread that. That's incredibly significant, and that's pretty much what we do every single day here. I can't speak for you, but I will tell you how I feel about it. It causes me more emotional pain to miss a move because I didn't follow through on my plan than when I followed through with my plan. All right, so let's wrap it up there. 154. Trading is literally not possible without a plan. So everything starts first in your mind and then it conjugates to reality, right? Other than that, if you guys have any more questions, comments, concerns, you can let me know. We'll see if the false breakout of all-time high holds. I think naturally sellers just need to hold below today's high of day and break down today's low. That's pretty much going to be the consensus for the overnight price action today. We'll see if overnight price does anything of interest. Hope you guys enjoy the rest of your day. If you need one-on-ones with me, you know to reach out. Head over to tradingwars.com for any of the inquiries. Please do not fall for any of the scams out there on the internet, especially on social media like Discord, Twitter, YouTube, TikTok, whatever it may be. There's going to be somebody out there trying to take advantage of you because they're the ones that fail at trying what we want to do, which is become the best professional traders in the world, right? Do not fall for those scams. Be safe, protect yourself. I'll see you next time. We will be live tomorrow morning for the RTH live stream. And obviously tomorrow we have CPI 8:30 EST in the pre-market. Make sure you have stop losses and targets in if you have open positions, and make sure you're active on the chart if you want to trade, because if we do get volatility, I will be active and ready to trade. It doesn't matter if it's the pre-market, after hours, during RTH. If a high quality low of interest is active, then I'm going to be active as well. See you next time. Enjoy the rest of your day.